You may have heard of the Zurich axioms. It's a list of things that was put together by Swiss bankers on how to invest. And I have some markers today, axioms as well, which is the way we do things. And there are a lot of things in the market that I think are brainwashing and we are told to believe, or we do believe, and a lot of it is based on stuff which is really of very little use except in the long term. Ideas like buy and hold, it's time in the market, not timing the market. The market is a voting machine in the short term, a weighing machine in the long term. Any Warren Buffett quote is almost certainly trying to tell you to be long term, to be patient, and not to trade. Well, that may or may not work for somebody who's got billions of dollars, who doesn't have to worry about his mortgage, about the school fees, and doesn't have to pack 4 kids off to school with their packed lunches every day. But for the rest of us, we've got to try and make some money in the meantime. And our axioms have developed over now 80 years, including Henry and I, but 40 years each. And some of them include things like don't predict, react. There is just no point. Anyone who makes predictions, particularly people in the media, they're just making it up for clicks. No one can predict the future. It amazes me how irresponsible some well-known people are making predictions. But we prefer, or have worked out, it only works to, the best you can do is wake up in the morning and make decisions based on fact rather than fantasy. So we are constantly vigilant, and this works, to be constantly vigilant, wake up in the morning and make decisions depending on what has happened over the last 24 hours, week, month, what themes are developing. What you don't do is, and I find it amazing that some brokers will put out forecasts for, we think the S&P 500 is going to 6,000 by the end of the year. What a load of hogwash. How can you possibly predict 500 stock prices, let alone with all the share issues that they're going to do, and summarize it into a number for the end of the year? It is just rubbish. So no predictions, just reactions. The other thing is to realize that there has to be some risk involved. There's no money for nothing in the stock market. There's no money for no risk. And the best you can do is assess the probabilities and accept a level of risk. When you get involved, it's a question of what your risk profile is. The best you can do is to assess all the information and say the likelihood is, with various differences of likelihood, but the likelihood is that this is the trend and this is what's going to happen, so this is what I'll do. So, but it's only ever a probability. You have to accept that you can't be proud or prejudiced about what decision you've made and stick to it. You have to realize, the moment you've made a decision, the world's evolving. It's going to change. How could you possibly buy BHP on the basis of the research done in 1961 and still hold it today thinking that your research mattered? Everything's changing all the time. So the best you can do is don't predict, react, assess the probabilities, go with the probabilities. How early you get involved depends on your risk appetite, and accept that things are going to go wrong almost immediately. They're going to change after your decision, and you have to go with it. And there are other little markers today, axioms, some of which are logical and obvious, such as you can't be emotional. There's a thing called anchoring, about referencing the current share price to a previous price. That's irrelevant. If you never buy a stock because it's gone up 100%, then you're never going to get a 10 bagger, are you? So anchoring is a big mistake. The best investor is always going to be Spock, cold, logical, unemotional, analytical. You want to be a blue personality. An engineer would make a much better investor than an emotional person. And that's what you need to be. And as far as objectivity is concerned, one of our great expressions is that you've got to watch the herd, not join the herd. You've got to exploit the herd. There is nothing better than a herd doing 200 miles an hour with its hair on fire. That just flashes opportunity. And you're not going to see that if you're part of the, if you're chasing Afterpay, which of course collapsed. If you're chasing Afterpay with your hair on fire, you've lost objectivity, you're going with everybody else. That's not the way to make money. The way to make money is to watch everybody else losing their objectivity and spotting when that changes. So we do things a little bit differently at Marcus today. We think independently. All our members have adopted our thinking patterns, got their own objectivity, realistic about the market. We educate them about all sorts of market subjects, market tools, and what is wrong with the market. And we are one of the few people, I think, who tell it as it is about the stock market. So if you'd like to find out how it's really done, what's really going on, if you'd like to come and observe the herd with our tools, then sign yourself up to a free trial or subscribe to Marcus today and find out what we do.